Welcome to TradeTheMBA.com. This is John. This reports for the 30th of May, and we're going to end the month here. Well, all the excitement from the tariffs being overrun got suspended when the appeals court realized that it's not a good thing that the judges are jumping into matters that don't really have anything to do with them. The Supreme Court even added into it, is trying to quell some of this, what do you call it, opposition government. But it's going to continue to play, and then, it just moves back and forth with the market in the sense that there's no settled anything, and it becomes just free for all. Any given day, you're getting something new, and that doesn't bode well for being able to develop stability. But that doesn't change the general bias to things. Is still better than none, and all of the negative scenarios just have not played out for what they expected. And you take that for what it is, but at the end of the day, all you can do is trade with where the money is headed and where else you're going to go. You can go into treasuries, but that's been varying back and forth as far as yield. It's been pretty decent, so it's been quite a drain on capital wanting to come into the market. But everyone still thinks inflation's coming, and actually those people who jumped into the bonds at the preferential rates probably going to do pretty well with those, because you're more likely to see easing than you are constriction. It's just the way the numbers are reading, and you can see though from our shakeout, NASDAQ continuing its rise here from that. So that's completely congruent. We expected it when we saw this peak that we would have this dip down. As long as it stayed positive, we get a turnaround, and that would keep things where they are and slightly improved. And we already made the new high relative to it, just didn't close there. So maybe it's going to work a little bit more across, but still overall, and you can see the yield continuing to decline slightly there, and so that makes that peak move a good play for those that took advantage of it. From an oil standpoint, we're still not getting anything helpful, and it's not horrible in this spot. It's better than where it had been. So from being in the mid 70s and that to the low 60s, still too high, but there's nothing you can do unless they can somehow overcome all of the restrictions that have been put in place. And I, knew that we didn't expect that happening, but we're already now in the middle of the year, and they're nowhere close to getting it resolved. So now you're looking at suspending everything until the beginning of next year, just from a practical standpoint. So they did enough to delay things by almost a full year as far as growth and that goes. So for some people, I guess they think that's a good thing. I don't see why. But and the euro, very excited about the fact that the tariffs were, not happening, and then of course, once it reversed, the euro shot back up because they still think that the eurozone is the place to be. It's a European thing. From a gold standpoint, that uncertainty is just going to be a bolster to gold. I would also say for Bitcoin, in that it's filling back a little bit of the exuberance, and that's just because it goes a little bit further and has to come back and fill it in just a little bit. But ETH has also done fairly decent, maintaining those highs. I'm going to sneeze. There we go. Took care of that. From a 50K standpoint, there was the skyrocket, and then we just started the slow decay as the realizations came through. And then by the time the announcement was made, it was all pretty much eroded and filled back in. So positive extremes filled back in place. The MBI white led, still leading in here, but you still got magenta above, so that kind of stabilizes it. So your pressure is now at 50%, and as long as MBI white leads, you're not going to break over it. If you do, because of rising magenta, that would be like a really powerful short cover situation. So there it was as we opened up into the market and led to the down move. We can go back a little further if you want to see how that decay looked, going all the way back from the early morning when we first did the report to just continued cascade lower, filling all that back in. So that was nice profit taking. It also destroyed option plays, but now you've got the inverse on that, where put options in that are going to be the focus going into this Friday, and likely they're going to need to convert it to the upside to counter that, so that their book remains stable. And that's always the goal, especially when you come to the end of the week. And of course, new indicators will be coming out for June. They're already set to go, so you can look for those on the weekend. As always, though, anything relevant, I'll put it on the team chat. Have a good one. Trade well.